Okay, Professor Jim Schultz here for my Finance 512 class. It is Thursday, July 23rd, and I wanted to go ahead and do this video really quick on the. I'm gonna do a Starbucks earnings play today. I'm gonna do an Amazon earnings play today, and I'm gonna have to make this really fast because it is a daddy-daughter day, and so I've got to sneak this thing in while Penelope is finishing up her nap here. And as you might notice, I went ahead and I went incognito today. I don't want you guys to know what I'm doing. And you guys will figure all that out next week. So anyway, so let's go ahead and get started. So the first earnings play I want to put on is Starbucks. Now, like I mentioned in class the other day, I think I'm probably bearish on Starbucks, and not because I don't like their products, not because I don't believe in Howard Schultz. I think they have a tremendous product, and I think Howard Schultz is amazing. But it's just they've had such a tremendous run up. I think they're probably due for a correction, and I'm very much a believer in it's all kind of random anyway. So really these earnings plays are really just for an engagement tool more than anything, and so take that for what it's worth. So let's go ahead. I'm gonna do the August options for Starbucks. I'm going to use the weekly options for Amazon here in a little bit, and so I'll kind of show you guys how that works. Let's see, 80 strikes. Let's trim that down a bit. Let's look at like 40 strikes. That should be good. All right, so I'm going to show you guys kind of a cool way if you're bearish on a stock to give yourself a really, really good statistical chance at success. So what I'm going to do with the current stock price at 56.55, the first thing I'm going to do is I'm going to sell an out-of-the-money call spread. So the 57 is the first strike out of the money. As you can see, its probability of success is only 56%. So it's a pretty thin margin, but this is going to get a lot better here in a second. So I'm going to sell the 57.58 call spread, and I get a 40-cent credit for that. Now, you guys, and I'm only probably for the purposes of this video, I'll probably just do a one lot. Just because I have a lot more trading to do today in the futures, and I don't want to eat up too much buying power on this earnings play. So 40 cents, 41 cents. As you guys know, if I sell a call spread, that's the most I can make, right? It's 40 cents. The most I can lose is 60 cents, and that would happen, of course, if the stock were to rise above $58, right? And so what I want to do though to give myself a better chance at success is I'm going to actually combine this short call spread with a short put. So what I'm going to do is I'm going to go down. So what I want to do is I want my total credit right now is 42 cents. I want my total credit to be over $1, and I'll explain why in just a second. So I need about 58 cents from the sale of this put. So if the puts obviously are on this side. If you look up a little bit, it looks like I'm looking to sell the 53.5 put, which has a bid of 60 and an ask of 64. So maybe we could get filled at around the mid price of 62. So I'm going to hold down control, and I'm going to sell that 53.5 put. Now that credit is $6.61. That's because this is a 10 lot right now, so I'm going to change that to a 1 lot. Boom, $1.03. Now I'm going to lock that in. Now here's what's amazing about this trade. Because I'm collecting a total credit that exceeds $1, that means that if the stock price does rise above my short call spread, I'm not going to lose any money. I have no risk to the upside. And so the name of this strategy is called a Jade Lizard, and it's where you sell a put and then you sell an out-of-the-money call spread, and you make sure that the total credit you receive exceeds the width of the strikes on the call spread. And so by doing this, you have no risk to the upside. So if Starbucks has a great earnings call tonight and they just blow everything out, then what's going to happen is my call spread is going to be $1 in the money, but I've collected $1.03 to start the position. So I'm actually going to be up 3 cents if that were to happen. What I want to have happen is I want Starbucks to go down and land between 53.5 and 57. Now the expected move on Starbucks is $2.30, and so if that expected move does indeed transpire to the downside, then I'm in really good shape. all my risk in this trade is below 53.5. But that's $3 away. That would be that. It would take a pretty significant move from Starbucks to make that happen. So if you watch, what happens is when I click confirm and send, you notice my break even. I only have one break even spot. That means that you have no risk to the upside on this position. Now the most I can make is $103, which again, it's a one lot. I'm picking up $1.30, right? So that makes sense. My break-even price is $52.47, which is just the put minus the credit that you receive. The maximum loss, of course, looks really huge, and that's because, that's only going to happen if Starbucks falls to zero. That's not going to happen. Starbucks is not going to zero tonight, and so I'm not too worried about that. So I'm going to go ahead and send this guy, and I'm going to try to get this filled. Let's see here. I'll close up my position statement real quick. Oh, you guys can get a glimpse into how things are going. I don't want you guys to see any of that, but that's okay. So I want to go ahead. I want to fill this guy. Oh, there we go. Boom, we're filled there. $1.03. All right, perfect. So I got that guy in. So that's one thing you could do today if you wanted to. Let's look at Amazon really quick. That took a lot longer than I thought it would. All right, I'm actually going to do the July 4 weekly options for Amazon. These expire tomorrow because these earnings plays are just overnight plays anyway, so that really doesn't matter. So what I want to do is, for this one, I do want to look at, probably like 60 strikes. Because I'm going to do something a little interesting here too. So Amazon at 484. I'm actually bullish on Amazon. I actually think Amazon, might blow it out of the water tonight. And again, why do I feel that way? I have no reason for feeling that way. It's all kind of random. It's all kind of an engagement tool anyway. And so, Jeff Bezos, drones in the air, whatever hypothesis you need to convince yourself that Amazon's going higher, hey, it works for me. So what I'm going to do is I'm actually going to buy an at-the-money call spread. So the at-the-money price is about 485. So I'm going to straddle that 485 number by buying the 482.50 call, and then I'm going to sell the 487.50 call. And that's a $2.50 debit, or $2.42, whatever. Amazon's not a super liquid stock, so we're probably going to have a hard time getting this filled at a decent price. So it's $2.38, whatever. So basically, I've got to pay $2.40. But again, I don't like to pay something. I don't like to pay anything when I open up an options position. I like to sell other options against this so that I can reduce, my initial outflow. So what I'm gonna do, the first thing I'm gonna do is I'm gonna make this a one lot because I don't want to do a 10 lot in Amazon. So what I'm gonna do, so the expected move is about $40, right? So that takes me from 485 up to what? That's 525. Now, Amazon is a big mover, man. It oftentimes blows out these expected moves. So I'm going to give myself a little bit more room, a little bit more of a buffer. I'm going to sell the 535 call against this call spread. Now, again, this might seem strange, but I'll kind of explain after I set this guy up. I'll explain. So press Control, sell that call. That looks like a really strange number, but let's get the contract size in line first. Okay, so it went from a $2.40 debit to now I'm going to receive a credit. The reason why this is negative is because it was, the software was recognizing it as a call debit spread, something that you pay for to start with. But now it's something I'm going to receive, $2.40. So let me just go ahead. I'll lock that in, and we'll call it $2.35. So now here's what's great. If Amazon goes down, I keep that $2.35 because this call spread everything expires out of the money, and you get to keep the original credit. So if Amazon goes down, so if I'm wrong and Amazon goes down, I make $2.35. That's obviously fantastic, right? But if I'm right and Amazon goes up and it lands somewhere between 487.50 and 535, then that is the Goldilocks scenario for me, because my long call spread will be in the money, and my short call will be out of the money. So what's going to happen is I'm going to make the $5 from this call spread, and I'm going to get to keep the credit from the $5 from this long call spread, and I'm going to get to keep the credit from the short call that I sold. And so what ends up happening is, what you end up making is the difference between the strikes here plus the original credit that you sold the position for. So that would be $7.35. That's the best that could possibly happen. So where is all my risk? Well, I have a short call dangling out there, right? So if Amazon blows this thing out of the water and it's 600 tomorrow, then I'm going to be in a world of hurt, right? So all the risk here is to the upside. So that's why if I click confirm and send, you kind of see a summary of what I just talked about, right? I have no risk to the downside, so I do not have a lower break-even price. The maximum I can make is $735, right? Which again, it's a one lot. That's $7.35. The difference between the call spreads plus the original credit that I receive. My maximum loss is infinite, and that's because you have a short call that is dangling out there at 535. So I'm going to go ahead and send this guy too. And again, I'm not anticipating that I'm going to get filled right away. Yeah, Amazon's just man, Amazon. I'm gonna penny this. Oh, how about that? Those damn high frequency traders, man, getting me filled at good prices. So anyway, so those are two things you could do today. I gotta shut this down because I think I hear Penelope waking up actually in the background. But those are a couple things you could do. There's a bearish play on Starbucks, a bullish play on Amazon, and so hey, let's we'll see what happens.